This shakeout, it looks sort of suspiciously coordinated. You've got to think, okay, do I buy gold because I think that paper currencies are going to lose purchasing power? If you think that, then the answer is yes, and you hold it, you hoard it, you tuck it away. Otherwise, don't mess with it. Forget it. It's a waste. You'll just have sleepless nights if you try and trade it, because I can tell you, you try and trade this market, they will take you for every cent you've got. That's the reality of it. The idea is to make the yuan, if you like, the dollar's replacement. And this one will be a lot more secure than the dollar. I think that's the important thing. And as the dollar declines, I mean, we're coming to, there's no doubt in my mind that we're coming to the end of the fiat currency system.
Hello, everybody. This is Paul Buitink for Reinvent Money, and I'm very pleased to have Alasdair Macleod back on the show, my dear friends. I've had him many times before. Former stockbroker, trader, precious metals veteran, expert. Welcome back to the show, Alasdair.
And fellow colleague. It's very nice.
Yeah.
Thank you, Paul.
Almost forgot about that. Yeah, it's been such so long ago that we worked together at Gold Money. Amazing time during the previous bull run that went when gold went in 2011 to its previous high. Well, markets are insane at the moment. Before we started, we discussed and we wanted to talk about the silver squeeze that's going on, the short squeeze. Of course, we wanted to talk about gold, but first we have to talk about the price correction that we're currently witnessing. Because in dollars, I noticed a 5% decline today for gold. Basically, all the metals are 6% as we speak. We are recording this on Tuesday, the 21st of October, late afternoon European time. All metals are down. Is this like the obvious technical correction that was likely to happen, or what's going on here?
Yeah, I think basically, I mean, when you look at how much gold and silver and indeed platinum group metals have soared in recent months, some sort of correction was definitely on the cards. But the interesting thing is that the whole thing has really been a short squeeze. If you look on COMEX in particular, the speculators are just not there. I mean, they haven't really bought into it. The way I would measure that interest is looking at open interest. An open interest in gold is less than half the long-term average. Open interest in silver is roughly at the long-term average. I mean, there are obviously a few speculators in there, hedge funds, whatever, but not all that many. So this shakeout, it looks sort of suspiciously coordinated. I don't mean that, over the weekend, various bullion banks got together and had a meeting and decided to bash the market. But you do get this feeling, when you're a jobber. I mean, I've known jobbers, which is really what they do. I mean, the market maker is a jobber, basically. I've known these guys. I've been on the other side of them since 1970. And they do have this sense, if you like, in the market, when it's right to bash the price of something which they're short of. It's almost like a second sense. And if they haven't got it, they're not going to survive terribly long in whatever they're dealing in. So if one good dealer has got the feeling this is the moment when it's going to come off, the others also have the same feeling. So, you get this sort of compounding effect. And of course, I think what the buyers are doing in this, and remember, we're not talking retail market here. We're talking about wholesale market, and we're talking about big derivatives. The buyers, I think, they would just sit on their hands and watch this play out a bit before they decide, shall we buy some? And if so, what's a level? And so on and so forth. So, this is why I think this shakeout has been so severe. I mean, I'm looking at what's happened in silver. I mean, silver is down nearly 7%. Platinum's down 5.7%. Palladium down 5.3%. And gold, as you said earlier, is 5%. I mean, given the rise that we've seen, this isn't actually all that great. I mean, you would just say this is volatility, if you like.
Yeah, because people, of course, usually buy precious metals because they want more stability. The volatility is what you get at crypto, for example, but these are like crypto price swings that we're currently seeing in precious metals. So I think PR-wise for precious metals, it's not great to have insane swings, of course. But then again, when something goes up that fast, that much in a year, like gold and silver, then you have to have a correction at some point. And of course, the corrections are then more severe because of the high increase that went prior to that.
Yeah. Yeah, no, you're absolutely right, Paul. And I mean, I've always told people, don't trade this market. I mean, you'd be nuts to trade it because the guys on the other end are so powerful. You know, they'll take every cent you've got off you if you're going to trade it. And, you know, the answer basically is that you've got to work out why you're interested in gold and silver. You've got to understand what gold and silver are. I mean, particularly gold in the current context, what it is. You've got to understand that it is legal money without counterparty risk. Forget what the US Treasury says about gold being a pet rock or whatever. I mean, the reality is that in our common law and in everyone's common law, gold is money, it's final settlement, there is no counterparty risk. And the volatility isn't so much in gold. I mean, obviously there's been volatility in gold, but it's mainly in the currencies. So when you see, for example, the People's Bank of China buying gold, the way to look at it is actually they're selling dollars. And they have other use for those funds. But basically they don't want dollars. So that's, if you like, the sort of their gold purchases are almost the small change, which they haven't got any other use for, because they've got quite enough gold. I mean, not necessarily within their reserves, but the nation has lots of gold spread around various accounts, including the People's Liberation Army, the Communist Youth Wing, and so on and so on and so on. So that's the way to look at it. So you've got to think, okay, do I buy gold because I think that paper currencies are going to lose purchasing power? If you think that, then the answer is yes, and you hold it, you hoard it, you tuck it away. Otherwise, don't mess with it. Forget it. It's a waste. You'll just have sleepless nights if you try and trade it, because I can tell you, you try and trade this market, they will take you for every cent you've got. That's the reality of it.
Yeah, if I just look at my own business, of course, we sell in the Netherlands and Belgium precious metals through Holland Gold, and we still have many more people buying than selling. Of course, you get questions now when the prices go down, but this month has been a record month so far, and we're probably going to sell for about 100 million euros in precious metals. And it's a small market, of course, the Benelux, so these numbers are huge compared to what we used to sell. But most people, they don't want to sell; they just want to buy and hoard. So, what triggered the sell-off today is probably something more institutional. Or we had already over the past months, weeks, we've seen the price rise so much that people that were short, of course, got into troubles. So you think these people had to sort of come up with a sort of like double down, sell even more in order to hope for a crash like we currently see in order to cover their positions, or?
Yeah, I think there's another point which is worth making. We've seen various large American banks, turning bullish on gold. I mean, Jamie Dimon said he wouldn't be surprised if it went between 5,000 and 10,000. You had Morgan Stanley saying, you should put 20% of your portfolio into gold, which actually is an extraordinary statement from an establishment bank like that. I could imagine that Scott Bessent would sort of phone him up and say, "Why are you messing up my world?" But so they've turned bullish, and from the point of view of market makers, the bullion banks who are trading, if you like, on the right side of the of the quote, you know, this is not helpful to them at all to have this. So this is why if someone told me that there was a coordinated move to basically bash gold and silver and also platinum group metals lower, I could believe it. I really could, because what they would want, it's not that they're anti-gold or silver, it's just they want to get their position square. And I think this is a desperate attempt to just do that. Let's try and, get our bears closed a bit, and then at least, we can trade it at a higher level. I think that's all. That's what's going on, if you like, in London and New York.
Yeah, and in a way, the market needs a breather too, because there's just so many logistical challenges at the moment. It's like delivery times have gone up a lot right now for like a normal gold bar, like average size, whether it's 50 gram or 100 gram. You have to wait 4 to 6 weeks. So it's like if the bull market would have continued like this, then the logistical challenges would have become even more severe, because the refineries need to add capacity, they need to hire people, get more machines. There's also a lot of metal often in the wrong place. Like we saw in India, a huge shortage of silver, and then the same in London, and they have to fly it over from New York. So unlike crypto, it's an actual physical thing you have to deal with. So when demand goes crazy, like we've seen over the past few weeks, it leads directly to all sorts of issues within the supply chain.
Yeah. Well, staying, if you like, with the market rather than, the logic of buying or holding or hoarding gold or silver, you're absolutely right that you've got these logistical problems. I think the other thing which we will discover is whether on higher prices the shortage gets resolved. I suspect that people who have hoarded silver, I mean, let's just talk silver for the moment. It's true of gold as well. A slightly different situation. But people who have hoarded silver are either in two categories. They're either industrial users, and they're not going to sell their physical into the market, or they are investors. Now, there are various estimates out there as to how much silver is being held by investors. I've heard numbers of sort of 2 billion, 3 billion ounces. I don't know. I don't think it's nearly as much as that. I think all you can do is look at the stocks in COMEX and look at the stocks in London, and perhaps pencil in a figure for something in Switzerland. The rest of it, I think, we'd rather ignore, because the idea that you've got these investors, if you like, in places like China and all the rest of it, are likely to sell their stuff. I mean, if they sell it, you'll probably, circulate within the country rather than come onto the general market. I think that these people are increasingly concerned that if they do sell their silver, they're not going to get it back. And the reason I think that they are feeling that is that if you have hoarded silver, or indeed gold, and to a lesser extent platinum group metals, you are obviously taking a view that the purchasing power of the dollar or your own currency is declining. And we have seen enough evidence, I think, that this is now happening, perhaps at an accelerating rate. I mean, you don't need to be a sort of wonderful economist. You just have to have a look at, what Trump's doing, and you sort of think, this is capricious, it's destabilizing the whole thing. You see the geopolitical situation and so on and so forth. I think the answer is you hang on to your silver. I think that's what people will do. And I think that's what has really resulted in the squeeze in the market. I mean, you look at the stocks, in the vaults in the LBMA. I can't remember exactly what the figures are, but people try and make a guess about liquidity, and it's pretty minor. It really is. And of course, not only have you got the whole world, the retail world, I mean, all around the world. The story you were telling, I heard from Australia this morning. I've heard also in America, UK, everywhere.
Everywhere, yeah.
Everywhere. Everybody's run out of silver and gold coin and bars. The Perth Mint has stopped. It's got no silver, no gold, and so on. So this is a global story, if you like. And under those circumstances, you sort of think, well, if I am going to sell my silver, do I sell it while there is this shortage? I think I'd probably ride it out a bit more. That is if you're even trading it. If, on the other hand, you're a hoarder and you're sort of looking at what's going on in the world and all the rest of it, then you probably think, well, wasn't I clever buying it? I'm just going to sit on it. So you have this situation where there's something called a Giffen good. The more it rises, the more demand it creates, and the lower the supply becomes. In other words, it's a complete reverse, if you like, of market theory that rising prices will, release more product. Now, having said that, I mean, you've also got other factors coming in. I mean, there is no doubt that the mines are becoming very profitable on these prices. You must be coining it in, and if it goes up further, even more so. But what does a mine manager do? And I think this is a point which many of the sort of commentators don't really understand. A mine manager's job basically is to maximize his cash flow in the context of the business he's running. So when he sees the price rise, what he does is he mines the lower grades. So does this lead to more supply? Not really. And the other thing is that I think over 50% of silver mine supply comes out as a byproduct of the mining of other metals. So, that's something. Scrap takes a bit of time to, it doesn't take terribly long to turn it, but it's a question of refining capacity. And at the moment, refiners, they're not really interested in taking in silver because they're so busy with gold. So, there are a number of factors which I think lead to the squeeze. And, anybody who owns silver, I think, when they reflect upon it, they sort of think, well, wasn't I right to buy it? And I think that's the way it is. And with gold, there's something interesting there too, because we don't have the backwardations between the spot and the futures market. Seems to be quite normal. I think that the bullion banks are trading that reasonably successfully. I think they probably welcome the uptick in business. They will be losing a bit on their positions on a mark-to-market basis, but they will be making lots and lots of money dealing, I think. But the problem I think the gold market has is that following the fiasco earlier this year, whereby the Bank of England was exporting gold out of its vault as quickly as it could, I think the central bank customers, because it's mainly central bank gold going out on lease, I think they would probably question the wisdom of leasing, because in the past it was leased and it would sit in the Bank of England's vault. Okay, it goes round and round and round, being hypothecated, rehypothecated, rehypothecated, and all the rest of it. But at least it was in the vault, and you knew it wasn't going to go anywhere by the end of the lease. Now it's gone. It's gone. So where's it gone? Am I going to get my gold back?
Yeah,
I think this means that central banks would be withdrawing from the leasing game, and that I think is where the squeeze comes in gold. We don't see it in prices yet, but I think that's probably why the price is rising. I'm looking at it just purely in market terms. This is why the price is rising. It's been rising so steeply because the system knows that it doesn't have the supply of physical, which has come through leasing, if you like. I mean, the lease rates haven't jumped or anything like that. It's just that, we know that we've got to get this price up in order. I mean, this is a sort of collective, if you like, view. We've got to get the price up simply because of the lack of leasing coming on. I mean, what's leased is leased at the moment, but leases aren't necessarily going to be renewed. So that does mean that there's going to be tightness in the market. And consequently, these prices are going up. And I think that's the way the market makers look at it. In fact, you and I look at it in economic terms, which and I can tell you that people in the market just don't understand economics. They don't understand the economic thing at all. They just got sort of vague thing that, when people get worried about things, they buy gold.
I think what's happening then is that return of investment becomes more important than return on investment. So people really want to stick to it because they're not sure whether they can get it back ever. So in that light, you also see the repatriation, of course, of gold and people hoarding it instead of selling it, even with these higher prices.
Yeah.
But with gold, I get it also that people anticipate a new financial system, possibly BRICS-led, with gold as an underpinning. And if that's going to be fully rolled out, it makes sense to already own gold, because it will be much more in the future if it's going to be the new anchor again, like gold's becoming the new gold.
Yeah.
With silver, of course, it's a little bit different. It's also first of all, the price has been suppressed for so long, but it's also a very useful industrial metal. So it has two faces in a way. But do you also expect people to hoard it because they see it likely return as a monetary metal too, or?
Well, I mean, this is what central banks are doing. I'm not talking about your central bank, our central bank in Britain. I mean, yeah, they'd rather not discuss the subject. But I think the central bank community, particularly in the global south, BRICS and so on and so forth, they can see what China is doing. With the SGE opening vaults in Hong Kong and also Saudi Arabia, and there are probably plans for other ones, or certainly facilities elsewhere, whereby gold can be exchanged for yuan. This is setting up a system which will allow the Chinese, if it is necessary, to protect the yuan's value by turning it into a gold substitute. But that will be at the international trade level. The idea that individuals in China would be allowed to, have a gold exchange, if you like, for their yuan. I mean, I don't see that at all. The authorities in China, I think, are all about hanging on to what they've got. They don't really want to part with it. And I think it would be a mistake to sort of think that, the Chinese authorities, whether we're talking about PBOC's reserves or whether we're talking about the hidden holdings, sort of spread around the various communist organizations, government organizations, I don't really see that they will be feeding this new vaulting system outside China. I think they're going to still hang on to their gold. But I think what they will do is they'll say, well, what you could do is you could acquire some gold, put it in that vault. You could exchange it for yuan when it comes to trade settling and all the rest of it, so that you foreign country, have the facility to trade in a gold-backed yuan. They will set the rate at some stage. I think that's inevitably what's going to happen. And it doesn't really require China to part with some of its gold. Maybe a small amount, but basically, I think the idea is to make the yuan, if you like, the dollar's replacement. And this one will be a lot more secure than the dollar. I think that's the important thing. And as the dollar declines, we're coming to, there's no doubt in my mind that we're coming to the end of the fiat currency system. The Chinese, I think, are perfectly aware of this, and they want to protect their currency. They want to protect, their position, and they don't want other currencies, for goodness sake. If the dollar goes down, what happens to the other currencies? They go with it. It's as simple as that. So they will want to trade in their own currency. Of that, I'm absolutely convinced, and they will want to protect the value of their currency. So we can see this is beginning to happen. Now, I think the central banks around the world can see it. I think governments are beginning to see it. I think some of the really big players, like ultra-high net worth individuals, the sort of really wealthy families around Asia, who liaise with politicians, who have them round to dinner, and all the rest of it. I think this is the back chat that goes on with these meetings. They know about it. I think that some of the smarter hedge fund managers in the US probably know a little bit about it or suspect it. The rest of the investment world has not got a clue. But you'll find that the information filters down. It'll filter down gradually as, events unfold. And there will be if you like, a growing understanding actually about what actually is happening. And we're looking at the end of the fiat dollar. I think this is really what it's all about.
And are we looking then at the new Bretton Woods with the yuan as the new reserve currency and backed by gold, just like the US dollar was?
I think that's a good way to describe it, Paul, because the thing about Bretton Woods is that it was this sort of high level, you can't exchange your currency for gold, but this is a system which basically everybody who's in Bretton Woods, we're in there at a fixed rate, and gold basically is the tie for all the fixed rates. And that was fine, so long as the Americans, who had the bulk of the gold, certainly in the late 1940s, that was fine until the Americans began to run out of gold, and then you had the end of Bretton Woods. And Zoltan Pozsar, I don't know, you remember him? He was Credit Suisse. He described the current situation as Bretton Woods 2, and which is not the rather clumsy way of putting it, because it's not a Bretton Woods system in any way. So you had the Bretton Woods system, you had the fiat currency system, and he was raising the question mark: are we going into Bretton Woods 3?
Right. Yeah.
In other words, is this the end of the fiat currency system, and it's going to be replaced by something else? That was the question he raised. And he was raising this question, 3 or 4 years ago? And I think the thing that's really done it was COVID, when economies shut down. There was an explosion in government debt as a result. And it's clear to me that large parts of our economies haven't recovered from that at all. I mean, you've got some zombie companies who took on debt basically because they ceased trading for however many months. They took on debt and they've never really got rid of it. And the problem is that interest rates have gone up. They can't afford current interest rates. And of course, this has led to other distortions. I mean, for example, you've got the shadow banking system, so-called, in America. In this case, we're looking at private equity and hedge funds who use their, if you like, their rating in order to borrow from the banks to lend on to those who basically the banks won't lend to. Why won't the banks lend? I mean, the banks aren't stupid. They won't lend to these companies because they're zombies. So the zombies are getting sort of payday loans out of, the shadow banking system. And that's a big accident waiting to happen. It really is. I mean, and this is what Jamie Dimon was referring to the other day. He was talking about cockroaches. You see one, they're going to be more.
Yeah.
Yeah.
And to harp back on the China situation, does China benefit from issuing the world reserve currency then? Because I feel like they are going to have the same problems as the US in the end had with that situation, where you basically your currency is overvalued and it's not good for your exports. And China has been thriving in a way, their export, because of their undervalued currency. They're going to lose that benefit then if they decide to step up to the occasion and become the world currency issuer.
Well, that would be the view, very definitely, of an exporter based in China. There's absolutely no doubt. But if that argument held validity, then we wouldn't have had our industrial revolution. This country, your country as well,
with hard currency,
and the rest of Europe became extremely wealthy on the back of gold standards. So the idea that it's economically destructive to have a stable currency, which is absolute nonsense. And you and I remember times when the Japanese yen was strong, the Deutschmark was strong,
Dutch guilder was strong, and we were thriving in the 90s as well.
Exactly, and you did jolly well. I mean, okay, no businessman in the export business likes a strong currency because they like to devalue their costs. Of course they do. But, the Germans, Mittelstand, got round this basically by producing superior products. You would buy German because it was better than anybody else's, and that was the way they worked it. And China is actually doing the same sort of thing. I mean, its technology has actually made its exports really incredibly cheap. The trouble is that everybody is, like the Brits, the Americans, and all the rest of it, just sort of try and stop the Chinese imports coming in the belief that that's the source of all our troubles. No, it's not. It's giving benefits to our consumers. And this sort of thing is very, very good for our industry because it makes them actually, sort of produce things more efficiently because they have to respond to it.
Yeah, exactly.
So I've got a call. Can I just get rid of this? Hold on a second.
Yeah, sure.
There we are. Got rid of it. Sorry about that. I should have put it on silent.
No worries. And I promise you to keep it short anyway, because you're a busy man and I'm also being swamped here. But maybe just to wrap up, because I can imagine that our viewers, most of them, of course, invest in gold and silver, are maybe a bit scared after this correction. Of course, we saw one last Friday as well. I see prices are still around the same range that we just discussed. What's the final advice you would give to like an ordinary retail investor who's taking gold and silver?
Well, I think, the thing that's interesting, I did a bit of research recently into what happened in Germany following the First World War. And there were 3 phases. And we've gone through 2 of them. The first phase was between 1918 and 1920. And basically, the German economy had to adjust, if you like, following the war. And the purchasing power of the Reichsmark actually fell quite significantly. It lost something like 4/5 of its purchasing power. But then there was a period of stability, and admittedly helped by the fact that German exports became very competitive with the lower cost base and all the rest of it. But this led to a stock market boom, where stocks went up about 300% between February 1920 and December 1921. You had this sort of wealth was spreading amongst the middle classes and all the rest of it. And so, everything had recovered very well. And indeed, the Reichsmark, rose against the dollar, which was fully convertible into gold. It was the best performing currency in the world, just for that brief moment of time. Now, we then had the stock market began to crash from December the 1st, 1921. And between December the 1st and 1921 and November 1923, in other words, sort of 22, 23 months, something like that, the Reichsmark collapsed in value. So much so that one gold mark, pre-war gold mark, was worth 1 trillion Reichsmarks. And to put it in, against the gold-backed dollar, before the war, a Reichsmark was at 23 US cents. So, you're looking at somewhere between 4 and 5 trillion Reichsmarks at the death per dollar. And now, fast forward to today, our First World War was actually COVID. We shut down our economies. And the central banks reduced interest rates to 0, and in some cases negative in Europe, for example, and Japan. That led to sort of a rise, if you like, in bond yields, in inflation and all the rest of it. Not as acute as between 1918 and 1920 for the Reichsmark, but nonetheless a similar situation. Since roughly late 22, 23, whenever, bond yields have stabilized, interest rates have stopped going up, and indeed bond yields have gone down a little bit. But the important thing is that the stock market has taken off everywhere. We are now about to enter the 3rd phase, and the key to it will be to understand the moment the credit bubble bursts, because the whole thing has been driven by a credit bubble. If you look at lending to stock investors, I mean, the level of margin loans is now $1.2 trillion. And that backs roughly $3 to $4 trillion worth of stock. This is, I tell you, this bubble is the biggest ever. And if you want a psychological marker, the rise of Bitcoin is rather like your tulip mania, but without the bulbs. I mean, I know you did jolly well out of Bitcoin in the early days, but it is not legal money. And, these hodlers who are sort of so keen to think it's the money of tomorrow rather than all the rest of it, got no legal status whatsoever as that. And that does matter, even though they would say no. And they sort of say, well, it's going to be complete anarchy. Okay, it's going to be complete anarchy when currencies collapse. But do you think governments are going to relinquish their hold on their things? No, they're not. They tighten up. And not only that, but nobody is going to be, when you can't rely on electricity, you can't charge your phones or whatever, what use is it? No.
Yeah.
And not only that, but it's to misunderstand the role of gold. The role of gold is not to rise. The role of gold is to tie the value of credit. Now, just imagine if you were, let us say, you have an idea, you want to manufacture something or whatever, or you want to expand your business. If Bitcoin was the money, then you would go to a bank and you would borrow in credit on the back of Bitcoin because the bank would create the credit. I mean, this is the way it works. Okay. With gold, that, let's say, over the next 2 years, pretty much what the value of that loan will be, what you've got to repay. But with Bitcoin, you don't know. I mean, with a shortage of Bitcoin, if there's any economic expansion, what you're going to see is the value of Bitcoin rising if it was money. So you as a manufacturer, you can't go out and borrow credit on the back of Bitcoin in order to expand. I mean, this is going to drive you back into medieval times. It just doesn't work.
Yeah, we both have a little bit of a different view on Bitcoin, so let's save that discussion for some other time. But basically, so what you advise people to do when it comes to gold and silver is just don't panic. This is just a correction, but since we're in the third and final phase, when you compare it to the Weimar situation, it's just before we are going to hit some sort of superinflation cycle. And it's best to stick with your precious metals and don't give up on them too easily.
I'll go a bit further than that. Rejoice in the opportunity to pick up some cheap gold and silver. That's what you've got to do.
We see a lot of people doing that at the moment at Holland Gold. But yeah, thanks so much, Alasdair, for your time again. And crazy markets. Hopefully everyone can stay calm and also enjoy the ride in a way. Yeah. People should definitely follow all your stuff. I love reading McLeodfinance.com, which is where you have your Substack. I'll put it in the show notes, McLeodfinance.com, and you're also, of course, on X. Anything else you want to share, Alasdair? Some final advice, some final words to end the conversation with?
Well, if you want to really know what's going on, subscribe to my Substack channel, I reckon.
Everyone should.
But I'm going to say that anyway, aren't I?
Yeah, perfect. Okay, thanks, Alasdair. Hang in there and stay safe, and I'll talk to you in a few months, undoubtedly.
All right, thanks very much, Paul.
Bye, Alasdair.
Bye.